Hello, this is Japanese Economic Review Channel. Welcome to the April 2026 Macroeconomic Pulse. Today, we review the preliminary Japan indexes of business conditions released on June 5, 2026. We will explore the current state and future trajectory of the Japanese economy using the latest data. Let's look at the core indicators. The coincident index, showing current heat, surged by 1.1 points to 117.9, indicating strong present expansion. The leading index rose 0.5 points to 115.9. However, the lagging index dropped by 0.4 points to 111.2. Viewing the economy as a cycle, Japan remains in a clear, expansionary phase. The coincident index is actively accelerating toward a peak. Meanwhile, leading indicators suggest continued growth, though lagging constraints persist, primarily driven by pricing factors. What drove the 1.1-point coincident surge? Investment goods shipments, plus 0.63, and wholesale sales, plus 0.30, contributed significantly, showing a robust B2B sector. Conversely, export volume was the biggest drag, minus 0.29, highlighting weak external demand. Looking ahead, upstream industrial metrics like the Nikkei Commodity Index, plus 0.71, are highly positive. Yet, consumer-facing sectors, such as new housing starts, minus 0.57, and consumer confidence, minus 0.47, are contracting, polarizing future economic momentum. The lagging index dropped 0.4 points. The Consumer Price Index, CPI, was the single largest drag, decreasing by 1.04 points. This structural shadow indicates that household consumption and pricing trends continue to constrain the broader economic recovery. From a historical perspective, the coincident index at 117.9 is exceptionally high. Both 3-month and 7-month trailing moving averages validate a steady upward trend. This unshaded post-2020 expansion period signifies a continuous and resilient recovery phase. It is crucial to distinguish between the composite index CI and the diffusion index DI. While CI measures the magnitude and tempo of economic fluctuations, DI measures how widely these trends spread across sectors. CI shows the mountain's height, DI shows its base. This brings us to a vital insight, the magnitude/spread divergence. Despite the coincident CI rising sharply, the coincident DI sits at only 43.8%, well below the 50% threshold. This signals a fragile recovery driven by isolated sectors rather than broad-based participation. These insights rely on a rigorous data refinement pipeline. The government uses a symmetric change and outlier processing mechanism, smoothing data with a 60-month moving average. This filters out noise to reveal pure economic momentum and true baseline trends. Finally, our analysis is based on 30 core indicator series, 11 leading, 10 coincident, and 9 lagging metrics. From final demand inventory to corporate tax revenue, this comprehensive framework ensures our macroeconomic assessment is grounded in robust data. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.